Hello everyone, let's talk a bit about Tesla because they had their earnings release. It wasn't great, it wasn't terrible, at least in my opinion, but it shows that 2024 is bad for Tesla. It's bad for Elon Musk. He doesn't have much to offer in this Q2 earnings release, and he postponed everything for October the 10th for both the robotaxi unveiling and information and blah blah blah, and also for the new platform. So at this point, Tesla is dropping like a hammer, it's dropping like a knife, and it may be an opportunity for some people at a point, not right now, because I think it will go a bit lower, to add more shares. But I want to talk about what were the issues. I underlined with red and green what was good and what was bad. The first thing that was bad was the automotive sales. It's a clear decline of 9.25% compared to last year's quarter, the same quarter last year, which is bad. We had increase in regulatory credits, but I wouldn't factor these as core business, even though it's part of the core business. But so how should I put this? I don't want Tesla to rely on regulatory credits. It would be a bad thing for that to happen. And given and depending on who the president will be, it may go away. If Trump will be elected, they will cut them immediately. That's my point of view. If Kamala will be the president, yeah, it's a very good chance the regulatory credits will stay in place and Tesla will profit from that. On this topic, there's a good thing to underline. If we look at Ford and other companies, other competitors, we see that they are not inclined that much to produce EVs. They're shifting money, shifting investments from EVs to regular platforms with gasoline. So Ford and other competitors are leaving EVs a bit behind. And this can be a very good thing for Tesla because it kind of diminishes their competition, which is good. Okay, going back, if we look at automotive leasing, again, we have a decline. Even though the percentage is big, the amount is extremely small, so I don't really care about that. We have a huge increase in energy generation and storage, 99.7%, and this underlines the fact that energy generation and storage may become a very strong pillar for Tesla. So it's very good. I'm really happy to see this. I would be extremely happy to see this type of increases of over 90% to be sustained over time. I mean, maybe we can see in not necessarily next quarter, but let's say next year, another 100% increase to like 6 billion and so on. If we see incremental increases year by year of higher two-digit growth, that would be great. So very important thing. Also services and other, we have a huge increase, 21.3% percentage wise. But again, I would love to see this as a core business for Tesla, getting closer and closer to the automotive sales. I don't think it will get to 18 billion too soon, but I think getting to 10 billion would be great at a certain point in the next few years. But the problem, so besides having lower sales, which we already knew, we had deliveries were worse than Q2 last year, we knew that. But because we used the inventory, I thought it would get even better. But until we get to the profitability part, we have the cost of revenue, and we see that cost of revenue declined by 5.66. But if we think about it, so we had a decline of 9.25 in revenue sales, but we had a decline of 5.66 in cost of revenue for automotive. This means that the cost for production in terms of automotive was higher. So Tesla had higher COGS. This is really bad for Tesla. So I would underline this, and I would follow the next quarters to see exactly how it will perform, because having higher cost diminishes your gross profitability. And we see that if we compare Q2 2022 with 2023, so for 2023 was like 82% in terms of cost for automotive sales. Now it's up to 86%. So again, bad thing happening here. Going further, the gross profit is closely similar to last year, the same quarter, almost 1% increase. But we're thinking, okay, so we have kind of the same gross profit, and we see that the differences in R&D and SG&A are not that big. Why do we have a net income so small? The issue is here. So restructuring and other restructuring here is mostly due to the fact that they fired a lot of people and they had to give severances. I think 80 to 90% of this amount is due to that. So that affected really bad the net income, because we had a diluted, we had an EPS of $0.46 per share. But if we factor in and add the restructuring cost back, so we consider, and this is an unusual item, if we don't take that into consideration, we actually had an EPS of 0.65. This means that it beat estimates by 4.84%. In my opinion, that's how we should look at it, because restructuring cost is a one-time thing and is not part of the core business. Yeah, we had an increase in research and development, but given Tesla's stance, I think it's normal to sometimes have increases. I wouldn't want it to go extremely high without a reason at a certain point. Maybe it's because the robotaxi, or maybe it's because of the new platform, maybe it's because of Grok and their investments in AI, and we'll talk about that in a moment. So I don't want a huge increase here without a reason. If it's a good reason and we will profit out of it in like 1, 2, 3 years, I'm happy with that. If not, that's bad investment, that's bad money management. So we'll see. In terms of SG&A, not a big increase in my opinion. I mean, well, it's a bit weird given that, they fired a lot of people. Why do we have an increase in SG&A? But it's not troublesome at this point, so I wouldn't give that much thought yet. If it continues to go up and they, I don't know, fire even more people or do any weird stuff like that, I would start questioning it. But at this point, it's not really necessary. Okay, I mentioned Grok earlier. So Elon Musk mentioned at a point that they are still using NVIDIA, and because NVIDIA is extremely expensive and the demand is high, they are considering using Grok for their training of their AI. This means that, and it's a confirmation that Grok is second tier to NVIDIA, at this point at least. But I strongly believe that in the future their main focus will be to make Grok better for their ecosystem, so they will ditch NVIDIA at a point. Not fully maybe, and not too soon, not in like 1-2 years, but down the line I think the idea is to easily ditch NVIDIA, because from a capex perspective, so from a capital expenditure perspective, it will be the best option for Tesla. This quarter they had $0.9 billion increase in capex, out of which 0.6 was due to infrastructure of AI infrastructure. So this means that it's a big deal, it's a big chunk of money that they're losing because they're not using Grok, or they're not efficiently using what they've built in-house. So I think that will be a main key point for Tesla at a certain point. I think they'll go the Apple route at the point again, but it will take a bit of time. All in all, I don't think Tesla had a horrible earnings release. I saw a lot of people on YouTube saying that, oh, it was bad. This means Tesla is in big trouble. I wouldn't say it's in big trouble. I would say it was, let's say, neutral to a bit bad, but not that bad. I mean, again, judging and taking into account this restructuring cost, I think if we eliminate that, we were in estimates, which is good. I think that we already know that 2024 is not Tesla's year, and maybe not even 2025, the first half, we'll see. We know that Tesla is very sensitive to the interest rate. Right now we don't have a cut yet, and one cut will not suffice, so it will probably take a bit of time. We know that we have this issue that so Tesla is more, let's say, prone to benefit from a Democrat president, even though Elon Musk donated to Trump. What happened there? We kind of know Elon Musk is more inclined to liking Trump than Kamala. That's definitely the case. But again, from what we know of Trump, he will not ruling in favor of Tesla, I think, and not in favor of EVs, not Tesla in particular, but of EVs. So we have that as well. And lastly, we have an economy where people don't have money. And this is directly hurting Tesla, because Tesla is benefiting the most out of a strong economy. The economy right now is not strong. We have an AI boom that's having where we only have companies that are performing well, but people don't have money. So we need the economy to start softening, to start growing again. Until then, Tesla will just report bad. That's kind of my 2 cents in terms of Tesla. I'm not that annoyed with its earning release. We'll have to wait for October to see more on the cheaper platform, and we'll have to wait for October to see about robotaxis and anything else. At this point, if you are doing your own analysis of Tesla, I wouldn't bother factoring in FSD. As we stand, FSD is not important in my opinion, because it's nothing palpable, it's nothing concrete, and I would just eliminate that from my analysis. And I would also eliminate Optimus for now, because we don't have clear use cases, use cases in Tesla. We saw some videos where he was putting batteries in a box. That's not helpful. So we still have to wait probably to 2025 to see more of Optimus. Then we can start factoring in some revenues, some potential there. Until now, I think it's risky to factor that in. Just consider Tesla for what we have. We have EV sales, we have energy storage, we have some services and others where, yeah, I know they're selling FSD and stuff. So for now, I think Tesla would be a good to add more around $190 to maximum $205 per share. More than that, it's in overvalued territory in my opinion, and I think it will go around $200 with this correction. We'll have to see going forward, but this is kind of the place I see Tesla in a good state to add some shares. I wouldn't say all in on Tesla around that amount, but it's a good place to add shares. Short term to medium term, short term I'm a bit bearish, because I think it will fall even more. Medium term, I'm not really sure about that. We need more data to see, and we need to see who the president will be and how the economy will evolve, because it's really dependent on that. But long term, I still see a lot of potential in Tesla to make great things. So that's all from me. If you like the video, if you have any other things to add, if you want to complete my ideas, please leave a comment. Please like the video, because it will help me tremendously and will help the channel. Please share it. And also, of course, subscribe, and don't forget to activate that bell so you can get the video as fast as possible. That's all from me. See you next time. Bye bye.